Good morning, good afternoon, good evening, yWhales. My name is Siva Avaru, managing partner of yWhales Solutions, and we've got a great guest for you today. I'm joined by Carson Cook, founder and CEO of Membrane Labs. Carson, how are you doing this morning?
I'm doing great. How are you?
Good. Membrane Labs. I mean, the name is not indicative of what your platform is. So give us a little 30-second spiel of what Membrane is and what you guys do and how you guys are deploying, awesome capabilities here in Web3.
Sure. So Membrane Labs has created the Membrane platform. Membrane is a digital asset settlement and operations management platform. Sounds like a lot. It basically means for institutions that need to manage all of their movements of crypto assets on chain as a result of trading and lending activities. Membrane gives all of that to them in a box and streamlines all of their operations.
Oh, interesting. So who would you say is your targeted, I mean, you just mentioned institutions, retail traders, do they have access to your platform at all?
Good question. We're planning to unroll that in the near future. Right now, it's more targeted towards OTC spot desks as well as lenders and exchanges and other enterprises. And then in the future, I think these same tools will be powerful for retail traders, but at the moment, we're more focused on institutions.
Oh, that's awesome. Well, we'll dive a little bit deeper into the actual nuances of your platform, but I just have to ask, I was LinkedIn stalking you. I was looking at your background and, I see a fellow guy from Wisconsin and I'm just perplexed. How does a guy from Wisconsin, and a PhD to that matter, eventually, spin up a startup that is targeting, digital asset custodians and settlements and all that good stuff, private capital markets? What's your journey like here?
Yeah, great question. So I took maybe a meandering path to where I am today. So as you mentioned, I grew up in northern Wisconsin, went to school at Madison, started on the tech side, did a PhD in physics, master's in electrical engineering, spent maybe way too much time at school. Ultimately got into the trading world part-time, which is where I met some of the initial investors and co-founders in Membrane. And Following my completion of my PhD, I joined McKinsey, did management consulting on targeting banking, financial services, fintech clients for about three and a half years. That took me to Chicago, deepened my interest in financial services broadly, and during that time is where I really fell down the crypto blockchain rabbit hole. Left McKinsey in January 2018 and moved out to Los Angeles to start a firm called Fractal. Fractal was a prop trading and market making entity. And really from that experience, that's where I saw opportunities to go build infrastructure, picks and shovels in the space. So two things came out from kind of that experience. One, which we'll be talking about today, is Membrane, and the other is Tokamak, which is a DeFi protocol that launched in 2021 and is actually about to launch a V2, which we can get into another time, but it's sort of a liquidity provider in a smart contract that runs on the Ethereum blockchain and provides liquidity across a lot of dexes. So that was one opportunity that we saw and that I saw to go build. The other was just the significant operational hurdles and capital inefficiencies that exist in trying to run a trading or lending operation in the space. When you compare it to how it works in traditional capital markets, there's so much infrastructure built where you can have capital at one custodian or one prime broker and use that across a lot of different trading types. That just doesn't exist within crypto. And so that was what I knew we needed to sort of go build. And that's how Membrane was born.
You actually highlighted a very key problem right now, right? If you're an exchange, if you're a bank, if you're a financial institution, if you're a market maker, if you're if you're a broker, what have you, there isn't really a centralized rail, so to speak, when entering into crypto-backed assets, right? OTC trading, spot trading, futures, if you're in the EU, derivatives, right? We don't have any licensing here yet in the US, right? So that's thank you, Micah, right? That's a big deal. Right. But Membrane is actually accomplishing a pretty big gap right now in terms of the trading world, in terms of how financial institutions want to actually offer crypto financial instruments to their to the clients, and the same thing from brokers, same thing for market. I think the biggest thing for market makers and liquidity providers is the instant fulfillment of these crypto assets in 24/7 trading markets. How are you? Actually, let me reframe this question. How are you going to market with those traditional financial institutions that are probably very hesitant to touch the crypto space right now? We've just had huge banking failures. We have Gary Gensler that's on an enormous warpath right now in our industry. And so a lot of these TradFi institutions right now are probably very hands-off, saying, hey, we don't know if we want to touch this. There's a lot of uncertainty. There's a lot of risk. There's no regulation that we have precedent to align towards. What is your pitch for them, so to speak, to say, hey, come with Membrane. Let us be your enabler of settlement. Let us be your enabler of or let us enable you to be a custodian for that matter, right?
Yeah, it's a great question. So I think our clients there's a few different ways to segment our client base. One, of course, is those that come from traditional finance, as you say, versus those that are more crypto native. And we do target both. So if you're a crypto native lending desk, or if you're a crypto native OTC desk, those are great examples of clients, but also exchanges that come from traditional finance we're talking to. And to your point, those participants are very much looking at the market right now, trying to figure out, do they wait and see? We've just yesterday I was talking to one such client that was very excited to use our software solution for the clearing, netting, and settlement. And they're currently watching the market, kind of waiting it out, seeing, do they do it in the US, do they do it somewhere else? And they're coming kind of from the equity side into digital assets like Bitcoin. I think broadly across kind of our offering, we think of everything as post-trade. There's a number of different solutions that are focused on sort of execution, aggregation of different execution sources. And we see that as, well, a very important piece of the market, something that's been covered by a few, and there's multiple providers that are doing that very well. We decided to focus on post-trade, everything that happens, which is the clearing and settlement portion of this. And so as we talk to those different players, it keeps us in also less gray area, because we don't deal with execution or the actual trade or loan itself. Within Membrane, they're booking that with a counterparty, they're executing that with a counterparty, and then they're booking that into the system. And then within Membrane, both sides are configuring their wallets or the custodians, and we're netting down. So if you have 1,000 different trades or loans that you've booked into the system, it will net down to the fewest amount of payments or transfers that need to go between participants, whether those participants are exchanges, custodians, OTC desks. And so really our sort of two-pronged approach, getting back to your question, is if you go to the crypto natives, you just show them how their life can be infinitely better versus how their operations teams right now are underwater, dealing with Telegram chats, Google Sheets, and trying to figure out who to send what token to, and sending test transactions, asking for public addresses. We streamline that whole process, where now both counterparties configure themselves as an institution within Membrane, and everything is sort of handled within there. All they need to do is sign from their custodian or their wallet. On the non-crypto natives, it's a lot of letting them know what we're hearing and seeing from different participants that are sort of the principal actors. Membrane doesn't actually engage in any of the trading or lending. And everyone sort of is in this, okay, what do we do within the US? I think there is becoming more clarity sort of at a global scale, even if there's less clarity at the moment within the US. So happy to go deeper. I don't know if I fully answered your question or not, but that gives you a little bit of color.
No, I think you've got some things that we can chew here on. I mean, and one key thing that you highlighted is you're not an execution venue, right? You're not facilitating the trade. You're not, but maybe for our listeners here, you're more of the on and off ramp, so to speak, for institutions that want to enter into some sort of regulated trading, right?
Yep, that's a good way to put it. So like one way to think about it is, Siva, if you have an OTC desk and I have an OTC desk, right now we're going to be in Telegram or Skype or WhatsApp. That's sort of the current state of that market.
Well, it's a flurry. It's like a 24/7 war room, right?
Yeah, exactly. And more sophisticated ones, like big institutions that we talk to that come more from traditional markets, they might use Bloomberg or something else, maybe
like a TradeWeb or a 360T or something of that nature. Yeah.
Exactly, for execution. And so what we said is, great, let's just let them take whatever they execute wherever, and either they can enter it through the UI or programmatically via API, where we can integrate with those execution venues, drop them in. So now if you have, again, going back to you and me running two different desks, you would have your ops team and they would need to scrape those channels or those chats, figure out what we did. They probably are doing no netting. So if we're actively trading back and forth, they might have 50 things that they now need to figure out how to settle. And within Membrane, that whole process is managed, and it would just be, oh, great, I owe you 10,000 ETH and you owe me 5 million USDC or whatever at the end of the day, which could be net of a lot of activity and a lot of trading. So that's sort of the way that Membrane streamlines it, or as you said, it's a way to get those institutions both in the space that right now are doing things in a very clunky manner, just because that's what everyone's doing in the space, or those outside the space looking in. Those from traditional finance will not enter and do it the way that current crypto natives are doing. They kind of look at that process and say, I'm out. So this is, as you said, a way to get them in.
Maybe that's key. Maybe you can expand on that, because I think you highlighted there's two very distinct psychographs of traders right now in this space. You have the traditional financial players who have a very much different trading mindset, and then you have the degens, the crypto natives, right? And the crypto desks that have spun up because they are the degens, right? Maybe you can give us a little bit more insight into, you mentioned, they think differently. What from your observations, what does that look like? How do you cross analyze a TradFi trader versus a crypto degen trader?
Mm-hmm. Great question. So I think this is going to be initially talking in kind of broad strokes here. In traditional finance, there's a lot less, you really have sort of a separation or bifurcation between the front office and the back office. So front office meaning those that execute the trade, back office and middle office being those that deal with all of the operations and all of the sort of the fallout that comes because you have the traders and the salespeople in the front office executing trades. The reason that is the large hedge funds, the large banks, anyone that does this execution, there's been so much infrastructure and processes built up over time that the traders, maybe the stereotypical men and women beating their chest and doing the trades, they don't even need to always. Exactly, Wolf of Wall Street. Yeah. They don't need to necessarily talk with the back office. They just have systems where when they execute, it's just going to flow through to them. They don't even think about that side of the house.
Within the crypto, Bloomberg terminal, right? The 80s exactly. Looking, it's just charts and candlesticks, and it's just, it looks like it's, MS-DOS type of terminal exactly. looking, right?
Yeah. So it's point and click. If you're doing high frequency trading, it's your algos are running. If you're there's still a lot that happens on phones and things, but all of this stuff is they just think about executing trades. Where am I buying? Where am I selling? They don't have to think about all the movements of equities or whatever, or the actual underlying assets on the back end. Crypto and the degens, as you said, to kind of go the full other side, is completely reversed. The desks generally, those desks that have found a way to get to scale have had to be super focused on operations, just because if you touch spot at all, if you're not just doing something with futures or derivatives that's strictly cash settled, but if you touch spot, it means you have to have figured out things like custody. You have to figure out how to integrate with exchanges. You have to be able to send coin or tokens back and forth with your counterparties. And so that's meant that back office and front office, the line is much more blurred within crypto. And to be successful on the front office as doing sales and trading, you have to work very closely with the back office people and be more operationally minded. And so what we're doing with Membrane is we're trying to take really the reliance on operations and sort of back office activity and movements and management of funds that exists currently in crypto, and simplifying that significantly so that you can really unlock massive efficiency across a desk that exists in TradFi, but does not currently exist in crypto market. It's generally being done in a very manual and very prone to error, I should mention, process where people are copying, pasting public addresses, hopefully not private keys, public addresses, and a lot of room for fat finger mistakes, and then they're manually sending tokens. That's really what we streamline and get around.
Well, and I imagine, settlement and custody is a huge deal for TradFi, especially, if the volumes of what they're trading is million X of what, a crypto desk or a crypto native desk is potentially going to be trading, just because of the economies of scale and their market making and relationships and all that good stuff. I might have an interesting question for you, and a lot of Web3 trading platforms that try to connect into the back-end connectivity of banks, for example, have to figure out the hurdle of how do I connect natively with a traditional enterprise stack? From a banking perspective or financial institution, that might be an order management system or an OMS, right? Or that might be a core banking platform, or Infosys' Finacle is one that comes to mind, right? Or Tenemos or what have you. And there are connections here that have a reliance on the Swift system, right? Does Membrane have to consider any of those possibilities? And if so, how have you addressed that without giving away your secret sauce, so to speak? But I think that is an interesting thing here that our listeners would be curious about, is that, a big question or a big concern of Web3 capabilities in general is, how do I weave these capabilities into my existing enterprise stack? So I'm curious on how you guys have addressed that, or what your purview of addressing that is.
Yeah, it's a great question, and it's super important, especially on more of what we call our enterprise clients, which are things that are exchanges or more like traditional banking institutions, because the larger the institution you go to, the more requirements they have for where reporting needs to go, how it's formatted, et cetera. So maybe the short answer is we have almost 60 developers now at Membrane. And when we get to those kind of counterparties, we have to sort of ask where and how their reporting needs. We sort of have the ability to get to any data, but each one needs it formatted a different way. So while we do
and
sort
that's
of have
a regulatory requirement, right? Sure. Regulators, the whole, post, pre, the entire trade life cycle needs to be reported. KYC, AML connectivity of the people that are actually trading and everyone that you're interacting with, and a full audit trail, right? And I think that's a big thing that a lot of people don't realize is when financial institutions are actually interacting with securities, the whole thing has to be captured. Every event has to be captured, and it has to be audited, ad hoc whenever a regulator comes knocking.
Yep, that's exactly right. And I think Membrane, I believe, is the first time within the crypto space that you can have that sort of rigor on the tracking for regulatory purposes of OTC transactions. Other places have this, like if you're doing on exchange, you can probably get that level of detail, maybe. But here, everything, if you're doing an OTC spot transaction, if we're lending and borrowing, and we'll get to the really powerful loan management suite that we have probably later in this call, or if you're in the near future doing derivatives. So we're adding actually the ability to do OTC bilateral options where we can do, we'll have the ability to cross margin, do custom terms for the margining and where and how the capital is held between counterparties. We'll get to that later. But anyways, the point is, for all of that, we have all of the reporting. And then while we try to make everything so that it's rinse and repeat and it's sort of one size fits all for each client. That's more the case for the actual desks. As you go to the institution, there's always some custom work we need to do just to massage the data into the format they need for that kind of reporting.
Do you have to do any settlement or conversion from transactions directly from Swift at all using crypto?
Great question. So that's actually something that got moved further up on our roadmap. We've been thinking about it for a while, but in the fallout of Silvergate and Signature and their respective networks sort of going offline, we got more and more requests from that from our clients and our prospects. And so we actually have been working through a very holistic wire and Swift management system. We're working through right now a Plaid integration and some other bells and whistles, I guess you can say, that will make it so that regardless of the bank, like basically we want a desk to be able to pick their bank, pick their crypto custodian, and then this can help sort of be the mapping between their trades and loans executed somewhere into all of the movements between those. Now, Membrane at the moment won't be the platform that they initiate those moves, but it'll be able to track that wires have arrived. And then when you get into the settlement process, that will know when sort of like the crypto side of things can move, because with a lot of this, you're trying to minimize settlement risk, or what's called Herstat risk, which is just the kind of classic, like if you and I enter a trade and you're like, great, you owe me $1 million of Bitcoin and you owe me $1 million of fiat or USDC. We're sitting there figuring out who shoots first or who sends first, and Membrane manages that as well. We have a system of smart contracts as well as something called atomic settlement, where we can actually synchronize the movements of funds cross-chain using the membrane platform, and we're working to build the fiat side of that in as well, as you say, the kind of Swift connection.
So you've got cross bridges built natively within your platform. It sounds like you have to be interoperable between different types of currencies. What cryptocurrencies are you guys most dealing with from a large institutional perspective?
So I would say at the moment, excuse me, Bitcoin, Ethereum, stable coins, still some Litecoin and Bitcoin Cash. Those are still where a majority of the volume is. I think especially just given what the market has looked like over the last year. I think broadly as we talk to clients,
I don't think a bank is going to want to deal with a shitcoin.
Exactly. And even if you take the crypto native trading desks and lending desks that maybe were more active in altcoins or shitcoins, a little over a year ago before kind of the crypto market crashed, they're definitely slower on that front at the moment. So that's where a majority of the volume, not just on membrane, but if you look kind of across the OTC trading and lending landscape in the space right now, that's where the activity is. I expect if, no one has a crystal ball, but if with the progress that the market's made since whatever the last bad headline was, if that continues, I think that market will come back to some extent. But at the moment, it's predominantly Bitcoin, Ethereum, stablecoin, sort of the triangles that you can make therein.
Let's dive a little bit into custody, because that's not a topic that there's a lot of content out there. How do you guys address custody for your clients? Let me start with that.
Yeah, great question. So custody is a very important piece for all of the desks and all of the clients that we interact with, obviously, because if you're in crypto, you have to think about custody. We took a very interesting approach, and I think we're maybe the only one in the space that have done this. We needed to be fully custody agnostic, because one of the early, I'll take one step back and then I'll get right to your question. The early sort of genesis or thinking for membrane came from realizing that there was no CLS for crypto. So if you're familiar with the FX markets, there's something called CLS, which is sort of the clearing intermediary that kind of sits between execution and custody and does all of the clearing, netting, and settlement to map between those things. That's really was sort of the early vision, and continues to be in a lot of ways for membrane. So from the very beginning, we said, hey, we need to allow clients, like if you take a large hedge fund, if you take 0.72, if they want to, if they decide that the liquidity is interesting or the opportunities are interesting to trade on Coinbase or trade on Binance, they're still not going to want to park their risk and ops team aren't going to want to park their funds at Coinbase or Binance necessarily. They're going to want to say, oh no, we custody at BNY or whatever, and their crypto or Fireblocks or whatever they choose. But those two decisions are made sort of independently, and that's how it always works in traditional finance, where the front office guys and men and women want to trade, and then where the risk people want to actually hold or custody the actual assets. So we realized that early, and we've been working on this since 2019 with a very large team. So we actually integrate to all the different custodians. We're not a custodian, and we never touch the private keys, nor do we want to be, but we have integration.
You would have to get a license to be able to be a custodian, right?
That's right. Yep. And we think that sort of ruins a clearing counterparty really needs to be agnostic to execution venue and custody. So we integrate to third-party sort of centralized custodians, as well as wallets. You asked earlier about the retail side of things. So we already have support for ledgers, MetaMask, Wallet Connect. Even though right now it's institutions that are using it, that will be powerful if eventually we launch something on the retail side. We have support for Fireblocks and more the MPC style wallets. So we really kind of span all of them. And what's really interesting is that means that you now have an OTC network or clearing, netting, settlement network that isn't confined to one custodian or one MPC provider, which is what everyone that has started to do that has done thus far. But now it's like, if you do business with a counterparty, you don't need to care where and how they custody. You can use membrane, and now the whole operation is streamlined regardless of where they hold their funds.
Yeah, and in the concept that you're kind of implying there, in a broad sense, so to speak, that maybe a lot of people that are just used to trading from a retail perspective, but might not have exposure from an institutional or an HFT, right, high frequency or forex trading perspective, is that trading at the institutional level is very much reliant on the strength of an overall network, the strength of an overall ecosystem. And it sounds like where Membrane is, positioned is kind of how do we make sure that your ecosystem, your network works as efficient as possible as you're interacting with crypto-based instruments, if I'm summarizing that correctly. Exactly and then how do we fill in the gaps to enable you as a market maker, a custodian, a settlement house, a broker, blah, 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 to make sure that you can go from point A to point B in a trade much as quickly as possible.
That's exactly right.
Do you, are you guys US based, or are you guys EU based, or where are you guys based out of?
Yep, US based. And then we also have a non-US entity, and we're looking to open up an office in Asia as well.
So as you're thinking about, this grand vision for Membrane, and obviously as a startup, it's iterative, and you create products as your requirements or your client requirements, justify it. And as you plan it within your roadmap, did you ever have any purview, or did you have to go and acquire any certain types of licensing to be able to actually, from a financial perspective, like let's say, and I'm just going to say stuff out loud here, they might not be relevant or not, but like if you have clients in the UK, did you need to go get FCA if you're in the EU, or FINMA, or obviously US is not applicable right now because no one really knows where the SEC is going to go. I think we all know where they're going to go. But, thinking about that, like, did you, Membrane, as you are thinking about, because you are a technology company, you are not the actual facilitator of these. You didn't have to go and, get a multilateral trading facility license. You didn't have to go to tell me a little bit more about that process. Because I think that's a big thing for a lot of crypto startups is for them to actually engage. I think the end goal is for a lot of these cool, especially DEX and DeFi protocols and companies that are trying to acquire the institutional clients, there is a major hurdle in front of them, and that is the regulatory hurdle. And how do they overcome that? And it sounds like you guys have overcome that.
Yeah, it's a great question. And as you said, sort of the answer is that we are really a software platform. And even though this wasn't the reason we didn't focus on execution, it's a big benefit of the fact that we were focused on clearing and post-trade, really management operations software. Because we don't enable execution within the platform. In other words, people aren't actually executing the trades and the loans directly in the platform. And also given the fact that we don't actually introduce the parties. So if your trading desk comes onto Membrane, you don't see any of the counterparties. You actually have to get an invite code from another counterparty, another bank, another lender, another trading desk in order to enter it in the system. And then if they're on, it matches up. But because we don't do
interesting. That's a little bit different than a TradFi system, right? If I'm interacting with Bloomberg Terminal, I can choose from my preferred, when I put in an RFQ, I can choose from my preferred counterparty fulfillers, right? And there's usually an option of best price, second best price, third price, and the system automatically interacts with that. But you actually have an option where you can actually choose because based off of the strength of relationship. But now let me ask a question. A big thing about regulation is to be the non-discriminatory choosement of settlements and settlement houses, right? So how does that, it almost sounds like you're conflicting with that.
Well, so it's a good question. If it was an exchange, right? If we were an exchange and we had multiple parties, then that would be the case. Here, it's basically people taking their bilateral OTC relationships and dumping them in. So it's sort of like each desk or institution is building out their own. There's a lot of networks built on top of Membrane, if that makes sense, in that each person's building out their own whitelist of who they're willing to see flow from and interact with on Membrane. So the OTC market works a little differently. To your point, we actually do want to get to something more like the Bloomberg style, as you say, probably over time. But in order to do that, we'll have to have our BD license in place, because in order to make those introductions between counterparties, we'll need that. So in order to be, and we're probably playing this on the safe side, which I think is the way to do things right now, given how regulations are.
Right now, yeah.
Yeah, so that's why we use the invite codes. We know that networks and sort of cross up between the networks would happen quicker if we bypass that. But we feel like we want to wait until the BD license is in place to do that the right place. So kind of do that at the right time and in the right way. So kind of coming back to your base question, sort of on how we're thinking about this, I would say we've been more cautious and we put more sort of restrictions and limitations on the platform until various licenses are in place that can allow us to even further the functionality. But at the moment, we're getting very positive results and uptake of the platform, even at its slightly more restricted capacity.
Hey, it's probably very enticing to just open the floodgates, so to speak. But it sounds like you guys are doing it from the right perspective. That hey, if we want to be a major enabler for the larger trading market, which is a traditional trading market, then we have to adhere to the way that they operate. And I think that's a big thing that a lot of the degens and maxis in our space right now ignore or overlook, because there's a huge, I would say, like high mind mentality right now within the crypto space or within the Web3, but let's say more specifically the crypto space, where it's like, we are the disruptors. We are going to disrupt the intermediaries. We are going to disrupt the traditional finance networks. But how do you disrupt 100-year plus relationships, right? Those relationships that have been built, by massive trading volumes on a daily basis. And now all of a sudden you come in with a more novel technology. Technology comes and goes, right? Mm-hmm. But people and process, that's what's more important than necessarily the technology. The technology will continue to evolve here.
Agreed.
There's a lot of news right now in recent weeks and recent months, especially around staking. Do you guys deal with anything in regards to staking? Do you offer staking services? Have you shied away from that?
Great question. So at the moment within our platform, you see sort of a portfolio management and wallet and account configuration. You see settlement and transfer management. You see the booking of trades. You see the booking of loans. To your question on staking, we've discussed that internally. At some point, probably staking and maybe even like portals into DeFi more broadly, probably in small tranches as we go, could make sense. At the moment, we didn't want to sort of overflood sort of the platform with too many features. I think we'll kind of wait as these desks ask us for that. I think those that are sort of understanding of the process.
So the desks are not asking for staking is kind of what you're implying here.
Well, it's interesting because I think they're interested in staking, but those that are seem to already have the technical know. Like, it a little bit seems like those that are willing to take that risk and go for that yield seem to have found ways thus far to manage that technical complexity themselves. I would say that's something that could work really well in the future in a platform like Membrane. But at the moment, it seems like those that are interested sort of have already figured out some way to do that. Now, I think as more traditional finance players come in, they won't have that technical know-how. So I do think there could be an opportunity for that.
Well, and staking is a relatively novel concept, especially when you're talking to traditional market makers, right? Like think of a sizable asset management fund or institution or hedge fund or what have you. And, I've got 5 billion AUM under my management. And now you're telling me that I could potentially enable a collection of rewards under the assets that are being custodied or held just by delegating control. And that is a novel concept that crypto and Web3 has introduced. But and it seems like a no-brainer, right? At least, from a layman's perspective, a non-trading perspective. Hey, I hold this asset and it's just sitting here. Oh, let me delegate control and let me collect some rewards by letting someone else custody that. And you would think where a lot of the major financial institutions have just massive amounts of assets under management, especially their family office clients, that would be a no-brainer. But it sounds like, and to your point, I haven't really seen staking as a service, let's call it, offered by a lot of traditional institutions, because it sounds like they haven't dipped their toes in that. And do you think maybe that's because there isn't really any regulation that has really, or there isn't any sort of precedent that has been set in terms of this is the proper way to stake? Because staking right now is another Wild West type of thing, right? It is a crypto thing. It is. If you do it wrong, it's lost, right? It's just like, hey, I might lose my action if I send the wrong key for my wallet, right?
That's right. Yeah, I think that it's probably twofold. I think as you said, it is sort of a Wild West. I think for those that are Web3 native like you and me, it probably doesn't seem too complex. But if you take a step back and you look at where the really big pools of capital are, that I think now are very much paying attention to Ethereum, much like they were starting to pay attention to Bitcoin a couple of years ago, and they would like that yield. But still, as soon as they hear staking, we should probably never underestimate the amount of time or friction it is even to do the 5 minutes of reading to kind of understand how something works. They hear something they haven't heard of, they're like, never mind, I'm not into it. I think that will change very quickly. The other piece of it, I think, is just sort of the enforcement actions and tone that's come out over the last year around staking programs, which often aren't actually the underlying staking, it's how they package things up. But I think still with staking and even some lending programs, I think that's caused everyone to sort of take a 6-month pause and sort of assess, not everyone, but a lot of players that probably will get into it, to take a little bit of a pause and try to assess things. What jurisdiction would they want to launch these things under, et cetera.
And you made a key point that I think a lot of people will miss. It's not the actual technology capability or the actual service, it is how it's being wrapped, right? Mm-hmm. And that is where it's not the staking service itself, it's not the staking capability that is the issue. It is the minute it is wrapped in, let's just talk conceptually, like mortgage-based securities and MBSs. Let's say you stake, 50 mortgage products together, and now that becomes a potential MBS security, right?
Yep.
There's nothing right now in terms of regulation of crypto backed MBSs, so to speak, right? Maybe a derivative, we'll call that, right? Of an MBS. That is the issue from a regulator perspective. It is not the actual staking service. So then if we take that back to a broader lens of applicability about, just Web3 securities or crypto securities, it is not the fact that like Ethereum itself is the issue, or the token offerings, or these native crypto coins, their tokens are the issues. It is the concept, the minute it is offered into a retail audience or into a non-retail perspective, and what is that considered from a financial instrument perspective, right? And then the minute it becomes considered a security, there's a whole new world that almost everyone has to, that crypto natives aren't aware of, but traditional financial institutions very much are. And that's the issue. And I think that's a big point of the kind of public narrative right now in terms of, are these securities? Are these not securities? Well, what is a security? Well, what is not? What is a security is pretty well defined. It's pretty easy. Go and pass it by the Howey test. Almost every single cryptocurrency is going to pass, or is going to fail, or pass, what have you. But everything is going to be even tokenized assets, right? Will be deemed securities. Maybe we're calling that here now as a future prediction, but almost every tokenized asset right now will be deemed a security. The minute that becomes wrapped as an asset that becomes traded by a trading desk, there is a whole view of regulation that needs to be adhered to. And it sounds like you guys have taken that perspective from the very beginning.
That's right. Yeah. So I think we have, and not to go through kind of the full regulatory strategy, but as I mentioned before, we kind of took multiple layers of this where it was like, okay, step one, we don't want to deal with execution. We just want to be the software platform, the software kind of solution that sits between these things and manages post trades. But then even step two, we're doing a lot within sort of, okay, what can US-based institutions? Oh, one thing, just taking a step back, everyone on the platform, this is why early on you asked about kind of is this a solution for retail? And at the moment, the answer is no, it's just for institutions. That also is another piece that helps us on the regulatory front. Everyone that comes on the platform has to be KYC'd. And then additionally, when they build out those kind of whitelisted networks we mentioned, where your trading desk says, okay, I want to trade with Carson's trading desk, they also have to do an attestation in it that they're KYC'd and have met off the platform.
On both sides, both parties.
Exactly. Yep, KYC'd all directions. And then additionally, even getting back to your point, we're within, whether someone's a U.S. institution or non-U.S., we treat that differently as well in terms of what features, even within our current restricted feature set until we get through the BD license, we give them access to. And that even gets down into which assets they can transact in. Because as you said, there's a few that look like they're most likely not securities. Bitcoin, Ethereum, things like that. And then there's a whole lot of others that, well, those likely or may turn into that. And so we're treating all of that kind of very carefully on the platform.
Let's talk about what I think is the most interesting offering of your platform, which is the lending side. And this really gets now into the world of where DeFi and DEXs and all of those capabilities start to become very powerful, right? So tell me a little bit about Membrane's lending offering, and how DeFi is it, or how non-DeFi is it? And that's a very bad question, but I think you get the essence of what I'm trying to ask.
It's a great question, and those are two really important points. I'll start with kind of lending, and then there's a whole lot we can talk about the DeFi versus non-DeFi, because I think it's an important point for the broader industry of how they think about the line between these things blurring. So taking a step back, we first built, I mentioned the clearing, netting, and settlement system and engine that we built. First thing we built on top of that was basically an application flow for booking your OTC trades into the system, netting everything down, and finding the smallest amount of payments to move between counterparties. Next thing we built was the same functionality, but for loans. Now, loans are more complex beasts because you have to move the principal and collateral initially. You can have margin calls and refunds where you have to top up from either direction. You have interest payments that go out. You have the unwinding. So you have this whole, like, a trade is a moment in time, and then you just have to play cleanup from that moment in time. A loan persists throughout time, and there's all this activity that happens downstream. So that when we added that functionality, and it proved to be one, more complex to build, but two, much more powerful for anyone that is interacting with a loan, either from the lender side or the borrower side. So within Membrane, the lender and the borrower are literally and figuratively on the same page. So you can track the LTV.
Because they're essentially the same platform. They're in the same pipe, so to speak.
Exactly. Yeah. And they're seeing the exact same information on the loan. And again, these are for OTC sort of off-chain loans, where if you just rewind to last year where everything blew up, and we won't go into that whole story, but across the whole lending market where people were mostly doing uncollateralized or under-collateralized loans. Within this, you can actually track all of that. You can see full risk management and portfolio management. Lenders can track what their weighted average tenors and sort of their P&L is across counterparties or across individual loans or baskets of loans. So once we built out sort of strictly the flow of funds kind of operations management for this, we realized the real opportunity here was to get lenders out of the Stone Age. Because if you looked at every lender, and I think I can say this pretty holistically now based on people we have on the team and who we've talked to across the space, every lender last year was doing everything out of Google Sheets. You had these companies that were getting to astronomical valuations and multiples because business was booming and because they were writing uncollateralized and under-collateralized loans. But they were running things in Google Sheets. They had next to no technology, and then they had operations analysts clicking away on ledgers and fire blocks to move funds, and all kinds of things were slipping through the cracks, and ultimately it blew up, which wasn't surprising. Not that it was uniquely their fault. There was multiple people at fault within the space. You could even say the bull market was who was at fault. But anyways, this whole system now allows them to move beyond Google Sheets, have everything tracked in one spot, and have all of the payments, like all of the settlements, are actually queued up at the right moment in time. So if you and I do a loan and we have weekly interest payments or monthly interest payments, that whole payment schedule is flowed out, and it will actually queue it all the way down to either your or my respective custodian at the right time for us to sign at the right moment and move. So we like to say, if you have counterparties.
Are you doing any of that on chain, or is that all still traditional API, queries? And I think that's a big thing to note, right?
Yep. Yeah, it's a great question, and that'll get into this kind of DeFi versus non-DeFi thing. So just one more thing to note, and then I'll go on to that. So if you have capital and counterparties, everything else associated basically with running a lending desk, you can use sort of Membrane's loan management software.
Cool.
Which is really cool. We like to say just get counterparties and capital, and then you can use this.
And that's the biggest problem right now with a lot of platforms, right? Is you can bring in let's, for everyone else listening, within a trade, there's buy and sell side, right? There's fulfillment and counterparty fulfillment and the offerings. Right now, you can offer anything, but the biggest issue in current state, like going back to maybe your McKinsey days, current state, is that there is not enough counterparty fulfillment on the buy side of offerings from the sell side. And so it sounds like you are bridging that by enabling more counterparty fulfillment of offerings, especially from a loan or a lending perspective.
Yep, that's exactly right. So this links back to your question you had a second ago on sort of what's on chain, what's not, what's DeFi, what's not DeFi. So both for loans, but across the whole membrane system. I started to call this stuff hi-fi for like hybrid finance, something that's between DeFi and CeFi, because I think
I'm going to have
for
to use
too
that.
long, yeah, feel free. We'll love if it catches on. So I think for too long in this space, and I have had a foot very solidly in both worlds over the last handful of years, and I have massive respect for both, but too much has been just building in DeFi or just building in CeFi or TradFi or whatever. And the real power comes from institutions or companies that start building products that use the best of smart contracts and the best of DeFi, but then realize that if you're building an institutional offering like we are at Membrane, that institutions still need to interact with that in a way that they can, which is facing a company, not necessarily a foundation or a DAO or a non-entity, coming in through some centralized UI, and then certain pieces of the process can use smart contracts. So within Membrane, the settlement, or in the case of loans, we're building out something for sort of use of escrow with smart contracts. We always use the smart contracts as sort of an option for institutions. So I think it's important with institutions to give them a choice of risk. So this goes back to when I was talking about custodians and where the risk and the operations team will independently, at a large hedge fund or a large bank, are going to select where and how to hold the assets. They'll also determine what risks they can stomach. So if it's Jane Street and Goldman doing a trade with each other, they're probably fine having a 1 day or even a week-long settlement risk where they're like, I know Goldman's good for this, they'll send me the money on Friday. If they're facing a much smaller counterparty, they might want to use an escrow smart contract that holds the funds, because they don't know if Carson Cook Trading is going to default and not send the funds tomorrow. So give them this.
You've defined smart contracts with defined thresholds for almost every type of risk profile, it sounds like, depending on the both sides of the trade that are coming together, and their risk appetite and what they want defined. Like using the example of 5-day settlement period, that might be defined within the smart contract and automatically executed and fulfilled by the smart contract. That's pretty cool. It's pretty novel. I don't think a lot of people realize that is a huge power of smart contracts. The ability to act as, if you go back to the natural core essence of what a smart contract should do, it should be replacing or being in place of an intermediary to begin with. Intermediary being, a human capital choke point in an existing process workflow, replicating or fulfilling the job of a human today, or of a step or a process. You've actually built multiple intermediaries with defined thresholds to accomplish basically a buffet of different risk profiles. That's pretty cool.
Yep, that's exactly right. Well summarized, and it's cross-chain too, which is really cool. And in fact, we have a patent now on this off-chain coordination of on-chain settlement. I think we're going to have an article released shortly on this, but we're very excited. We got this patent, but effectively, it means that across multiple chains, including actually UTXOs, this is what's very novel as well. So not only do we have smart contracts, but we also use delay functionality within UTXOs, so we can make sure Bitcoin settles if and only if the ERC20 side of a trade settlement settles as well. And like I said, since some institutions, even though you can tell them this technology, going back to your point on technology versus people and processes, you can say this technology is way better, you don't have settlement risk. But if they don't understand a smart contract or don't know how to assess the risk of putting funds in a smart contract, we never force them into that. We say, hey, you can also sign from your custodian, your wallet, and take the settlement risk. Again, the example of like Goldman and Jane Street moving Bitcoin or something between each other, right? They will probably just choose that and say, I won't deal with the smart contract. So for us, it's all about offering choice within the platform.
Yeah, and that's pretty important, right? Like everyone, at least in our space, assumes that if a major institution is going to adopt something, they're going to adopt the whole thing, the entire DeFi landscape, so to speak, right? And I'm saying that very generally and very broadly. But to your point, especially let's talk about settlement, they might be interested in the instrument offerings, and they don't necessarily care about a lot of the smart contract automation or fulfillment because they've already got a well-oiled process that can do that on behalf of them within their existing desks. And I think that's pretty important for a lot of people listening, especially for a lot of the Web3 natives, that a lot of, if you want your capability adopted by a lot of major institutions, you also have to understand how they work today and how your platform could potentially empower them or enable them to be more efficient than what they are today, versus coming in and saying, hey, you have to learn this entire new process. You have to understand a smart contract. You have to understand, what it's doing. You have to understand where it's going and how it's interacting with chains and off chain and on chain and what have you. But really, all you need to know is, hey, this could replace X, Y, or Z. This could improve A, B, C, or D, and it's modular in nature, right? And that sounds like what it's modular. You have a buffet of offerings, and you can pick and choose what you want. You don't have to adopt the whole thing.
Yep, that's exactly right. And I think that was a shift of thinking for me, because I very much came from the Web3 native crypto side of things, and realizing that, you have to think. I think a lot of DeFi and the first iteration of Web3 thought about where capital moved, as opposed to like who has the capital and what their kind of classic client analysis or user analysis of like, what does your user need. Now I think in this next wave of things, people are thinking about who the users are. So you have to think about how will they get in. And I think I agree with all of the people I think that are probably the Web3 listeners here, which is like, ultimately all of this stuff should go on chain and it should disintermediate institutions and things. I think we will get there, but in the meantime, in order to enable a solution for institutions so that eventually they can expand and sort of see the light and help us get there, whether that's in 10 years or 40 years, you sort of need to first kind of map to them, allow them to, as you said, it's not all or nothing. It's like get into this sort of inch by inch, and then slowly sort of the on-chain world can start to take over. But you sort of have to come to where they are today. So, man,
so I mean, everything you're mentioning is pretty novel. So how long has Membrane been live? How many clients have you onboarded? What size from a financial institution perspective? And could you hit on like, what type of profile they are? Are they brokers? Are they market makers? Are they liquidity providers? Are they hedge funds? Are they blah, 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 blah?
Yeah, great question. So we've been building for almost 4 years, and we have a team of almost 70 at this point. But we just launched. We wanted to make sure the platform was super powerful before we rolled it out. We just did our formal launch a little less than 2 months ago. And already in that time, we've onboarded 13 institutions, might be 14 now. And the kind of clients, or the way we segment things, are sort of across 3 main buckets. So one would be desks that are active in OTC, whether that's OTC spot or derivatives. I mentioned earlier that we have a really powerful derivatives, OTC derivatives offering that's coming in the next several months. So anything that's a desk, a market maker, a broker, a hedge fund that's active in digital assets, that's sort of that client base. Second group is lenders, so those that interact with loans. This could be on the lender or the borrower side. The borrowers tend to also be those desks that I just mentioned, but the lenders, of course, are generally crypto native, unique lending desks. And then the third kind of client segment is what we call enterprise. So this is where it's exchanges, custodians, aggregators, anything where they have their own flow from trading or lending or payments or something that needs to be sort of shipped through the clearing process, i.e. needs to be ingested or booked generally programmatically into Membrane, netted down, and then queued up for settlement between a number of their own clients that are counterparties. So those are kind of the 3 main buckets: desks, lenders, and exchanges. And those are the ones that we're actively talking to and that we'd love to talk to.
Oh, that's awesome. And this has been a great conversation. I want to end with maybe one kind of futuristic viewpoint from your perspective, especially when we think about traditional institutions and private markets, capital markets, and tokenization of assets, right? We're seeing a lot of thought leadership being published. Even our firm, the firm that I run within yWhales, we do tokenize a lot of client assets. And you're seeing publications being pushed out by the PwCs and the Deloittes, and the World Bank's now just released one 2 days ago about where there's the potential unlocking of liquidity on traditional illiquid assets because of tokenization. And we know that in traditional finance, assets are traded constantly, right? In a way that most of the public doesn't understand. And tokenization of those assets brings, traditionally illiquid assets art collections, car collections, real estate, for example, where liquidity could be instantly fulfilled because of the power of on-chain, TPSs, for example, right? The speed and the efficiency of the trade and movement of that metadata of all the associated data attributes of these assets. There doesn't seem to be a platform right now. There's a myriad of tokenization platforms, but let's be real. It's not true tokenization, right? You still have to do a lot of filing and paperwork, and all it really is saying that there is a representation of this asset as a data payload, right? But the true tokenization is the actual movement of all those data attributes behind it, as well as you're moving from the different parties during the life cycle of a trade, market makers, offers, lenders, blah, blah, blah. Eventually, there will be a point, and I think we can confidently say this, whether that's within the next 5 years, 10 years, 20 years, what have you, traditional institutions, crypto desks will start offering some sort of capability to start trading tokenized assets. Maybe it might start with NFTs. Maybe it might start with tokenized real estate. Where do you see something like a membrane fulfilling that capability, or just that industry as a whole? Because that is a net new novel concept in the world of trading. The ability to actually start trading assets instantly, directly, because of instant fulfillment of liquidity in a way that fiat cannot do today.
Yeah, it's a great question, and I'm very bullish about the future of tokenization or tokenized securities, whatever you want to call these things. It's something that has gone through a few different cycles over the last, as I'm sure you've been following, last 3 or 4 years, where everyone's like, this is the year for tokenization. And generally it hasn't been. I think there's a number of reasons why now it's actually top of mind. And we're hearing it from a number of the institutional clients and prospects that we talk to, whether that's exchanges, even that come from the traditional finance side. And I'm talking like very large players that want to get into this. I think the things that people kind of got maybe wrong in the last couple of years was they thought right away, like, great, we'll just tokenize equities. Well, there's so much, to your point about people and process in addition to tech, there's so much people and process built around equities markets, stock markets, that I think that will be one of the last things that moves over, because you just have all this friction, or all of this inertia associated with those markets. But all the things that you listed, these novel things that now you can tokenize, and now all of a sudden the liquidity and the speed of transaction for these things can really become unlocked. I think that's coming in a big way. To your point about, or your question about where and how membrane fits into this, we've been thinking about that, I think, since the first month we started this, that we don't want to be the tokenization, much like we're not the issuer of any of the tokens that currently can clear, net, and settle through our platform, but we're perfectly aligned to provide everything we talked about, the OTC clearing, netting, settlement services for trades, loans, derivatives, and other things, I'm sure, in the future for any of those assets. So as soon as those come live and there becomes appetite for those, and we'll have a front row seat as we talk to all the institutions and we see where they want to transact, we can probably within the course of a month probably have support for any of those assets once we see the demand. So we're going to be actively watching that, and that's going to be a big part of membrane in the future.
Well, and the settlement and clearing is arguably the bigger problem that needs to be resolved, not the actual tokenization of the asset itself. We can tokenize anything today, right? But the settlement and clearing is the big, question mark. Where are these going to live? How is it going to be settled? How is it, is it going to be done before the trade, or is it going to be done after the trade? Who is the rightful? How do we, attest, and how do we do audit and all that? It's great stuff, man. Well, man, this was a great conversation. I absolutely loved it, and I absolutely love it when I can talk to someone in the capital market space. It's an opportunity to learn more, and it's also an opportunity to kind of talk conceptually about a lot of things, and where it's one of the most impactful industries in our space, right? It's where crypto was born. It's the one that has the most attention, and it's nice to talk with someone that is kind of that is dealing with it at the institutional level, not necessarily the retail level. There's not that much content out there from an institutional perspective. So I thank you for giving us some of your time today. How do our listeners find out more? How do they potentially get in contact with you?
Yeah, absolutely. So you can follow us on Twitter. I can share the handle with you on that. We also are going to shortly be launching a YouTube channel where there'll be lots of individual videos about our product, as well as sort of a number of interviews that I think we'll be doing with people sort of across the industry. Also go to membranelabs.com and you can read more about our offerings. There's interesting links in there, and there's a link in there to get in contact if you're interested in signing up.
Cool. And we'll get those links up here in this recording notes here. Carson, thank you again for your time this morning. And thank you, yWhales listeners, for listening. My name is Siva, and have a great day, everyone.